Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the gold market. So as we said yesterday, our brand bond trade mostly is done here, and we now could consider different scenarios that could take place in the market in the nearest time. On the intraday charts, we'll take a look what could happen in today, tomorrow sessions, while on the daily we could consider the possible downward action here. Now it's a big question whether the market will show the return back to the lows, or even complete this ABC top OP target deep retracement to 18 even area, or maybe we should be ready for upward continuation here. Well, in two words speaking, I am mostly tending to idea of the deep retracement by a few reasons. First of all, as we have estimated in this week and the week before, the background, the sentiment of the investors starting to change on the gold, because market was rising too strong and too far in a relatively short-term period that it definitely needs to make the breath. And from that standpoint, as you can see on the CFTC recent reports, that the net long position starts dropping on the gold. Despite that price still showing the upward action, net long position starts to decrease, mostly by the closing of the existing long positions. This is not natural, this is normal, but in general this situation suggests deeper retracement on the gold market. Hardly it will be just minor pullback, the $100 on the daily chart, and then immediate upward continuation. It seems that mostly overall situation stands in favor of the deep retracement, some moderate retracement. The same story we see right now on the cable and maybe on the euro currency as well. On the euro it's a different situation, but markets also coming to the important target that and some reaction, technical response to this target could follow. That in general agrees with the things that we see on the euro, on the gold. The depth of this retracement could be different. For example, if you remember in our analysis by the Elliott waves provided by Stag on the forum, he suggests by the Elliott waves that market will drop just right back down to the lows, and then could be reestablished upward action. Theoretically, well, another scenario could follow is that market actually could form the ABCD pattern. So actually a Stag also considered ABCD, but in a bit larger scale. Well, but anyway, the overall consensus right now on the view that retracement on the gold should be deeper, and we will take it as the foundation in our view, and we'll consider the possible signs if market will start to form some signs, patterns that will suggest this type of action. We should be extra careful to these signs because it agrees with different ways of analysis that both suggest that probably market could show the deeper pullback. That in turn means that currently at this point it's not a good idea for taking the long position on the daily chart on the higher time frames, because it's in general suggested some pullback here. Still, speaking on the very short-term perspective, in today's session, for example, I personally do not exclude that we could get some minor spike here. Why? Applying the relative analysis on the euro currency, major targets also is not achieved yet, and euro also could show some spike. That probably should happen on some weakness of the dollar. And as you know, today we will get the release of the Fed minutes. That could bring the volatility on the market, and that could lead to some occasional spikes on the market. On the gold market, why I would suggest that probably some spikes could happen. Take a look on the follow time frame chart. Recall the targets that we have discussed yesterday. We said, well, trade mostly is done, but if you would like to, you could consider maybe holding this position a bit more, because market theoretically could reach the 1230, at least 1230. We also have higher standing target, but at least ABCD pattern could be completed. Here you can see it has not been completed yet. That's why maybe market could show the spike. So currently, right now, I do not think that the major pullback has already started. So I think that's better to wait. If you would like to go short, do not take the short position immediately. Wait at least until evening when the Fed minutes will be released. From the technical point of view, it would be preferable if market will break the support area before taking any short positions, because this is strong support. This is confidence, 1957, 1962. It's also short-term trend line stands here, and theoretically, until market stands above this area, it keeps chance on a possible upward spike. So this is possible. Only if market will break it down, that will be more, let's call it as a more guarantee that downward action indeed could start. So at this moment, I would say that it's better to not take short position right now, because, well, in the evening everything could happen. So it still could be pullback. Although I suggest that probably you were washed out by this spike yesterday. If you have followed our suggestion in tight stops, it probably has triggered your stops with this spike down. But if still somehow you are still have the positions, well, maybe it indeed could happen. It's minor spike here. I'm not sure this definitely will happen, but chances exist for that. By taking a look at the euro currency, by taking a look right now on the gold. So that's our current view. As a bottom line, on the daily chart, it should be, we suggest that's not a good time for taking new longs. Wait for a deeper retracement that's suggested by the Napoli analysis, that's suggested by the Elliott waves analysis. On the shorter term, do not be too hasty with taking the short position, because wait at least till the evening for the Fed minutes release. And it would be better for taking the short if market will break this 1957 confidence support. After that, we could speak about the possible taking the short position. Maybe some patterns will be formed. So that's our two major moments that we need to keep in mind for today, tomorrow sessions.